If you say who you are as well, that'd be great.
Yeah, Tom Sanderson, BBC Media Action, and I'm also chair of the Microfinance Club in the UK. So it's really a question for Lucy, William, and maybe Maria. Digital financial transactions, do you anticipate a growing move not just for social protection payments, but maybe also for salary payments and development actors wanting to make cash transfers using those methods? And I've read that in Afghanistan, police officers are now paid through mobile money. And when it first happened, they all thought they'd been paid twice because the salary they received was the full salary, not the salary minus the leakage. So is that, do you think this is going to be a massive shift in the way people are paid and the way social safety nets are provided for people?
Thank you.
Hi, Amy Parker from Children in Crisis. I just wanted to come back to some of the comments on the most remote and perhaps those communities that aren't on grid, so to speak. So we work very specifically in an extremely remote area of Eastern Congo, which is not covered by mobile money nor by financial institutions, and we've implemented the VSLA scheme. And I just felt that in the... So the Village Savings and Loans Association scheme, which is about building up savings. So it is informal, but the structure itself is actually quite formalised. And I just wanted to discuss around the document that's coming out, and how can such communities and such areas, which is actually about the size of Wales or Belgium, so we're not talking about a small geographical location here, how do we then lobby sort of financial houses to then link up to an area, and what are the risks in play? How can we mitigate the risks that are there for them around the fact that they are going to want to make a profit out of poor people, because that's how financial houses work, and the long-term view on that. And then again, also bringing in the mobile money aspect, where at the moment there isn't any coverage. And how do mobile providers, financial inclusion and government work in such a fragile state in the long term to bring these people in? Thank you.
Okay, thank you. One question right here.
Hi, I'm Jerry Ball from Care International. So thanks, Lucy, for mentioning the VSLAs in your discussion. And I kind of wanted to build on that a little bit with some of our experience and some of our more recent research around the topic, because we are engaged in quite actively linking mature savings groups with commercial banks across probably 7 or 8 countries in Sub-Saharan Africa. And increasingly, the banks are beginning to get the message that this is actually a very cost-effective way of reaching people who are much further down the pyramid than they would normally have seen as being their customer base. But in fact, those people do actually save up quite substantial sums of money. And in fact, our VSLAs, the average savings per annum in a mature group in Sub-Saharan Africa is about $58 per head. And since a group contains about 25 to 30 members, you're looking at quite substantial amounts of money that are going through a bank account. Now, it's good that some of the banks are beginning to see that there is actually a commercial reason for engaging, but many of them still treat it very much as corporate social responsibility. But in some work that we've been doing in talking to the banks themselves and looking at the supply side research we've been doing with Accenture, it's quite clear that the banks have been driven quite hard by their existing target customers, the more sort of mass affluent customers, to actually significantly expand their mobile services and their agent networks. And actually the agent networks is probably one of the largest expenditures and also one of the key geographic constraints. And we believe we're pretty close to the point where, quite a lot of commercial banks are going to see that this is where their future lies, that if they don't address this marketplace within the next couple of years, insurgent banks will come along and take quite a lot of market share. So we would be probably quite optimistic about that, but would say that, first of all, the commercial banks do need to be pushed more to recognize the importance of this. And secondly, also in some countries, that quite a lot more work needs to be done by the regulators to actually overcome some of the obstacles, for instance, around know your client regulations as they apply to groups. But one thing I would also say is, picking up the point about social protection, is obviously if governments push more cash through mobile money networks, then the whole thing does become a lot more commercially attractive to the banks and to the mobile network operators. So we would expect to see greater coverage in poorer areas, and that may be one of the key points of leverage that pushing social protection through mobile money actually can bring.
Let's just take some responses to those. Lucy or Andrew, do you want to respond to the digital financial, the growth of digital financial transactions?
Yeah, happy to start, and then Andrew chip in. Yeah, I think it's something which certainly donors are really starting to experiment with, and governments as well, more in terms of higher level salaries, like you say, police officers or government pensions and things. I think once you have the system in place within a country, then probably you would see quite significant growth in terms of expanding to other forms of social protection cash transfers. Some experience of donors in some contexts say is that they've been too ambitious in trying it too early. Say in Uganda, the experience of the SAGE social protection program there, they tried to push for electronic payments when there wasn't the mobile money system in place. They had to set up a parallel electronic delivery system. So in that kind of context, then that's not necessarily going to lead to further systems to enable more electronic and digital transfers. But I think it's something which certainly governments are excited about, because it cuts the costs of delivery, as it does for donors, and for beneficiaries. Again, it reduces the time. It's much more convenient for them. So it does, in principle, seem to be a winner for all sides, and like you say, for the financial service providers as well. Yeah.
Thanks. Andrew, do you want to comment specifically on that? No. Okay. Maria, do you want to take the? Amy raised this interesting question from Eastern DRC, which is a bit of an extreme case, but I think nonetheless opposite, which is, how do you get the commercial financial community to engage with that type of project, or with people on very low income, often in highly vulnerable and fragile situations? But it's something that you seem to have done quite successfully in BRAC to some degree. Could you maybe comment on that?
Sure, and I just wanted to tag on quickly in answering the first question that came up about digital payments too, because I think what we're seeing in Bangladesh now at BRAC and other organizations, not necessarily so much in the government, but large organizations, is that there are some initial movements towards more salary disbursement, honorarium disbursement via mobile money, replacing cash. And so, for example, one that we're really excited about here in Taka is with school fee payments, so enabling parents to start paying their school fees over mobile money, which also enables them to pay it a little bit at a time or a lot at once, depending on what works better for them. Health workers, different types of extension workers. And there's actually, this actually ties, I think, to the question on the DRC. One of the most interesting projects that inspired us that we went to look at recently was a group called the Tour Livelihood Project that worked here in Bangladesh in some of the most remote kind of island areas up in the north, and moved from doing weekly cash transfers to doing everything over mobile money. And overall had a pretty positive experience, but kind of similarly, we're working in a place where there's essentially no infrastructure. There's very little. They had to set up the agent network themselves, and it was somebody who came from kind of the mainland by boat occasionally, once a week, to help the recipients of this cash transfer there. And so it was a lot of work. It did save them money. They felt like their staff were safer. There were a lot of benefits of that, but definitely wasn't kind of plug and play. I think from my perspective, we're thinking about what are the, if you want services to be delivered at scale sustainably, there has to be a profit motive. or it's difficult to get, any sort of quality service in place that's not either, subsidized by a donor fund or provided by the government, which in some cases it needs to be. But I think what mobile money does is that the old cost structure that we used to have when we were thinking about serving a new client group has been totally turned on its head if we can figure out how to use mobile money effectively. And so I think, one of the most inspiring examples, I think, is out of Kenya, Mshwari, which is a partnership between a telecom and a bank, but provides people with loans, within seconds from their phone. I need to buy my vegetables now. I need a loan now. I can pay you back tonight. And just having kind of that financial service at their fingertips, I think, is something that could really benefit a tremendous number of people who need small increments of money, quickly to take advantage of different opportunities. Just one last thing, and then I'll go back on mute. But I think the one danger of looking too much at the Kenya experience is also that it's a group that's already pretty familiar with SMS, phone savvy, and the way that the mobile money feature was put on phones was very user friendly. And we haven't seen that replicated in Pakistan and Bangladesh. I'm not sure about India, but I think we're going to have to figure out how to make this work for a group that's much less savvy in SMS and kind of Roman characters if we want to see active take up and wallet usage like we've seen in East Africa.
Thank you very much. And Winona, do you want to take, because I guess that question is the really intriguing one, isn't it? That this is not an insignificant market, the $58 per capita figure. And this is just one example, actually, of a very large market where you have significant market failures. I mean, energy is another one, if you think of it. That people pay huge amounts for buying firewood or charcoal, that if they could get access to relatively low cost renewable technologies, they could cut household costs. It would offer a market for investors, but it doesn't happen. And I'd be interested in your take on this. It's a sort of classic bottom of the pyramid sort of story in a way, but I think understanding the barriers is obviously really important.
If I could address the question, I think this is about how you incentivize banks or commercially oriented financial institutions to serve a lower market. I mean, I think in that area, and this applies to those kind of areas which you talk about in the Congo, is that governments have tried all kinds of ways to do that by, for example, in India, with requiring people to lend a certain percent to those particular markets, or requiring that banks open up like no frills accounts, or actually subsidizing directly. So I think there are all kinds of tools and mechanisms that have been used by governments, none of which really have worked terribly well. And there's one report which I thought was very interesting. I can't remember who wrote it, but it's called Undercover Banking in Tamil Nadu. And what it talks about is, with government schemes encouraging banks to serve low-income people, no-frills accounts in poor areas, is that they actually sent people out to go to those banks and try and open an account. And they found all kinds of foot-dragging exercises by bank staff, because the banks, at the end of the day, it's just not profitable for them to do it. So that the bank staff there just ignore them or tell them to wait or to queue or whatever it is. That those sort of government schemes to try and encourage people to join, to open an account, haven't been very successful. And I think one of the things that perhaps more emphasis should be placed on is more about the regulatory environment, for example, for encouraging smaller financial institutions, for cooperatives, because in those circumstances where there is a local market where it might be profitable, for formalizing microfinance institutions that are going to be operating there, that it's quite important that the regulatory environment allows those kind of institutions and new institutions that want to come in and take up the opportunities there to take them up, rather than actually fingering existing banks to try and go out of their comfort zone or to go out of their profit zone, basically, to serve markets which aren't very, very viable. And I think the other thing, one of the case studies that we did for this was in Tanzania, is that there is a role, for example, for governments, I think, to subsidise perhaps the mobile network. Certainly Gates Foundation, we were interested to know that in Tanzania, in terms of the mobile towers out there in some of the more remote areas, that was actually subsidised in this case by Gates. And we asked them, well, is that something that you would continue to do? And in that areas, they said, well, now it's got to a point where even it's not necessary for subsidy. But, in areas like that, then, perhaps there is a role because that kind of infrastructure, investment in that kind of infrastructure, which would then make it easier for banks to follow, or for mobile money operators to follow. If there are roads or mobile towers going to those sorts of areas, then it's going to make the market basically more viable for them. So I think those are the sorts of...
But it is part a banking business model issue as well, isn't it? I mean, if you look at what banks do in Africa, by and large, and speaking in gross generalisations here, is they recycle government debt on very lucrative margins. I mean, they don't. This isn't the sort of stuff that most of them do. And actually, you do need regulatory reforms to get them into these areas. In a way, it seems to me. Andrew.
Yeah, well, I don't want to talk about regulation, but I'd like a short response on the Eastern Congo question. I mean, I don't know Eastern Congo, but there must be large amounts, there certainly have been over the last X years, large amounts of humanitarian payments of one sort or another going into that region. One issue is for the humanitarian organisations to begin to see longer term and begin to think about a social protection system, and maybe supporting government, maybe going it alone, and that might be an entry point there. I mean, it's very difficult to get those links between humanitarian work and longer term development work.
I think this is the issue. The zone I'm talking about falls directly in between humanitarian and development.
Okay.
It's a humanitarian zone, but it's actually a development area now. So we've been working there for 9 years, so in the long term. But it's so remote with regards to all sorts of infrastructure, with road access, with mobile access. But there's at least 500,000 people there, but it never features on any form of national sort of data or anything. So it's just recognising that, and I'm sure there are other parts in the world that fall into that category, and that are maybe still not being addressed, and that something like the VSLA structure is actually probably the most appropriate structure there at the moment for financial inclusion, until the ball gets rolling for more what we would
for bigger systems.
Exactly, yeah, and perhaps not to brush it under the carpet or to downgrade the need to save first and then access credit, and that very, very structured way. And just by having a group structure that meets and creates that, and then also the inherent solidarity that comes with that, and the community level checks that are in place there, are actually incredibly positive, and that sometimes maybe we've almost bypassed that to look at what needs to come next before building that strength first. So,
Okay, thanks. Another round of questions, please. I'll come back around this way. Thank you.
My name is Antoinette. I have two questions. One is for William and Maria. The first question to William is about the weather index insurance. You said that agricultural insurance in developing countries has failed. I just wanted to know why. Is it because the insurance companies or the banks are just not interested, or because there's a perception that the poor cannot pay or doesn't have the money to contribute to the insurance? The second question is to Maria. I think she's touched on it earlier on in one of the questions asked. What were the challenges in replicating the Bangladeshi model to African countries, Asian countries, and Latin American countries? You said that the case in Kenya is a bit savvy. Can you expand on it? Thank you.
Thank you. Right here.
Thank you. My name is Michael Fryer. I'm a master's student in the Development Studies program at the London School of Economics and Political Science. And my question, I guess, would be best directed to William. You had talked about suspicion that around the financial inclusion insights data that poor people indicated that they didn't have it, or people who didn't have an account indicated that it was because they didn't have enough money. And you were saying, like Lucy mentioned with financial diaries insights, and Kevin mentioned this as well, that poor people do save. But something that hasn't been discussed as much as the ways in which those forms are very different from saving in a formal institution. So for instance, in India, saving in the form of gold, which it has the advantages that there's a good market for it. You can pawn it, you can get it back. So it's actually rather liquid, but there's a cultural aspect as well to that, to saving in gold, that is a real challenge for banks looking to include people. How can we offer a product that carries the cultural prestige that gold currently does? So maybe if you could talk a little bit about the need for qualitative research to complement large-scale quantitative studies to get at those challenges for design, because perhaps financial inclusion shouldn't really count if you have an account but you don't use it because it doesn't meet your needs. Thank you.
Right here.
It's Lewis Temple from BRAC UK. It's very encouraging to hear about the potential for the index-based weather insurance for agriculture, and I'd love to learn more about the example in Ghana. In my experience, one of the biggest sort of excluded groups from financial services are small farmers, and there's very few examples of a good delivery of credit, in particular to small farmers, to help them invest in their land and it move from subsistence to higher value commercial agriculture. So question is, that's a great example in terms of insurance, but have you come across many other examples, promising examples in terms of other kind of financial services as well, with credit and savings, which are particularly geared towards the business needs of smallholder farmers and their particular cash flows? Because it seems to be a particular challenge for microfinance groups and banks alike.
Thank you. Let's go to Maria first. So there was a specific question from Antoinette for you, which was what is really distinctive about the Bangladesh and the BRAC experience that you mentioned relative to Kenya?
Oh, was that the question?
Actually, Maria, if you put your microphone down.
Sorry.
We're watching your every move here, you see?
I know. I have to look very serious the whole time. Sorry, I thought the question was more about adapting BRAC's model to Africa. Was it the other way around?
No, that
Yes?
that was the
Okay.
question, yeah.
Okay, great. So just to be totally candid, I'm much less familiar with our work in Africa than I am in Bangladesh. So I just want to say that. And also, I just heard Lewis speak up, and he just got back from a trip to Africa. So you might want to follow up with him for his thoughts as well. Some of the big differences that I've seen are, first of all, we come into Africa as an international organization, whereas in Bangladesh, BRAC is essentially as old as Bangladesh. So we came out of a liberation war. We started, we're part of the history, the fabric of the culture, the country. And so, there's no skepticism about BRAC's, objectives here, about where we're going, how long we'll be here, all those things. Whereas, anytime you go into a new country, you kind of have to establish yourself there. And I think that has been a new challenge for BRAC as it started working internationally, maybe a little bit less so in places like Pakistan and Afghanistan, where there's a bit more shared history and religion, but more so definitely as we move towards Africa, for example. Another big thing has been, I think, the government regulation and the way the government works with NGOs varies tremendously between countries. And so figuring out how to, uniquely partner with the government in different contexts has been something that's been tough. Specifically on microfinance, one of the actually kind of like a very basic challenge for us is that the population density in Bangladesh is what we built our model on. And so as we move to places like East Africa, but especially West Africa, figuring out, how to serve very rural clients in a sustainable way, given that the density is much lower, has been a big challenge for us. On the other hand, there's a lot of things that are working better in Africa than they work in Bangladesh. And so we're trying to figure out how to take them back. So one of them is our work, particularly in Uganda, working with youth on financial and social empowerment. The young women in Uganda seem to have a lot more economic opportunities than young women in Bangladesh. And so that program has really flourished in a way that we're still struggling to figure out how to do it here. And similarly in Tanzania, with mobile money adoption being what it is, there's a lot more appetite from our clients there to move over to mobile money transactions with us compared to what we see here. And I just wanted to add one thought on the weather insurance, because we have thought a lot about introducing insurance products here at BRAC. And one of the, two of the big problems I see, one is that, at least in Bangladesh, there's a sense that people don't really trust insurance companies. Like, insurance is often just a big scam to take money and then disappear. So it's hard to get people to put money into it. And the other thing is that the demand's often not there, right? That, like, when we look at, any type of insurance product, really, people are unwilling to pay for something that they're not sure they'll get a benefit for. And so that's why both for medical treatment, versus insurance, we've thought more about loans. We're actually thinking about an emergency loan based on a weather index as something to pilot as well, because we think that might help with the risks, but get around kind of this unwillingness or reluctance to pay for things.
Yeah. William, do you want to use that as a segue into the wider discussion about the weather index bonds and why they haven't worked particularly effectively?
Right, yeah. I mean, I think the question was about traditional agricultural insurance and why that hasn't worked. And basically, all of the schemes that have been, that I'm aware of anyway, and reading the literature, have basically lost an enormous amount of money. And the reasons for that are, firstly, moral hazard is that people are making claims which may not be related to the actual peril that they face. So, in fact, not investing so much time or effort in their farm in order to get the payout from the insurance company. But basically, the big one is the transaction cost of insurance companies serving large numbers of very small farmers and assessing losses from that. Also, this question of adverse selection, where people who are at high risk will buy the insurance much more at a great higher proportion than those who are at less risk, and that the insurance companies find it difficult to differentiate between those sorts of customers. So it's led to very heavy losses. I mean, that's the case in the developed world as well. It's been pretty hard to offer agricultural insurance, and some of those problems are addressed by index insurance, but some of them, particularly on the delivery mechanism, are not. Yeah, I think that your point about the savings culture, if you like, is an extremely important one. I think a lot of the microfinance institutions and others that are offering savings to low-income people are looking at the features of informal savings, in terms of easy access, low balance requirements, liquidity, small amounts, that sort of thing. There's a lot of designers of savings products are looking at those issues. A question of saving in gold, I haven't, with a formal institution, I'm not aware of that. But certainly, I think that you're absolutely right. There is a huge, important qualitative issue that needs to be researched when designing savings products. Yeah. I'm sorry, Lewis, on this products for small farmers. We looked basically at insurance and saving, and didn't look at credit. But just on the mobile money side, I think it's also interesting to note that, compared with some other like banking systems, that for the mobile money accounts, that of those that replied to the GSMA survey, which was about 13 mobile money operators, they said 48% of their customers were in rural areas. And I think that the fact that the distance to the agent is a lot closer than going to a bank branch makes that kind of delivery mechanism for savings to be much more accessible to small farmers. But we did not find any specific savings products that are notable aimed at small farmers.
Okay. Lucy or Andrew, do you want to respond to any of those?
Just on that last point, I mean, I think the self-help groups in India, the VSLAs, the other savings clubs and tontine and so on, I mean, all these sorts of things are what small farmers use. And if it's women who are members, which it often is, I mean, they're channeling those resources into their households. I mean, I think small farmers, it's a real market failure. It's a real gap in the market. And that's why these links with social protection, linking up the informal savings with formal services, have got to be the way forward, I guess.
It's interesting. Actually, you mentioned I think the Ghana study, which I'm not familiar with, but there is actually quite a lengthy literature on this issue of suboptimal investment on the part of small farmers. That, if you're in a high-risk environment and you can't insure against it, you're not going to invest necessarily in areas that are going to secure the highest returns. You're going to skew investment towards lower levels of risk, which actually in a way reinforces the poverty trap that you're in. Is there a final round of questions, please?
Yes. Xavier Lecacher, formerly from DFID, and doing a few reviews on financial inclusion programs. I had more political economy questions for your working group. So I think, Andrew, you are chairing for this paper. Because there are too many issues. It's a shame that this gentleman from the Nigeria bank could not be with us. Because there are these various models that regulators are willing or not to push, because it does also create issues. I mean, if you are in a country where your two major mobile phone operators are owned by foreigners, do you want to open a boulevard in front of them to also own and control the mobile money market? And the second political economy question is more on the side of donors like DFID and making markets work. And you mentioned this, the bottom of the pyramid kind of concept. Would we accept as taxpayers and donors to subsidize heavily very exciting business models like we have done in the past for M-Pesa, if it would benefit 70 or 80% rich or middle-income people and only 20% poor people, but millions of them? And we have had huge debates at the Microfinance Club, I remember, with researchers from the UK who have done a kind of in-depth look at M-Pesa beneficiaries. And they say, that's fine, you may have 3 million poor people, but you spend 500,000 of taxpayers' money that have also benefited 15 million not that poor people. So have you progressed this thinking in your working group?
Thank you. Other questions? Please.
Thank you. I'm Ulla Baggio. I'm an independent international development consultant. Also worked for Danida for many years. And I was just wondering the cooperative movement and the cooperative banking system and the business model, both for the movement and the financial institutions, in terms of small farmers and informal savings groups. Is there any connection there? Because, well, the cooperative movement is all about poverty reduction, in particular in rural areas. So that was my question. Thank you.
One last question.
Hi, Jerry Ball from Carrion. This is a very specific question to Maria in two parts. One is that bKash, which is the mobile money operator in Bangladesh, was set up by, or certainly heavily invested in by, BRAC, and I therefore it'd be interesting just to hear a bit of the background as to why it was felt that was necessary. And the second one was, you made the comment yourself in a previous answer that the user interfaces in East Africa are much more accessible than they have proven to be including Bangladesh. But if BRAC actually has a direct interest in bKash, I wondered why you haven't been able to influence the right kind of user interface to allow the poorest people to access that service.
So I think what we'll do now, let's start again with Maria. So Maria, I mean, there's a whole bunch. There's a broad political economy question, and a specific question to you as well. I mean, if you want to take an opportunity to address both of them briefly and also some concluding remarks, then I'll ask the other panelists to do the same.
Sure. So the questions about Bcash and BRAC. So I think, like everyone else here, BRAC sees the incredible opportunity. You know, that you have a tremendous number of people in Bangladesh. You know, we're at a point where I think it's something like almost every household in Bangladesh has a phone now. And so there's a tremendous opportunity to bring more people into formal financial services if we can find a way to leverage the phones. So I do think the East Africa experience shows us the promise of that, and it was, you know, that largely influenced BRAC's decision to really pursue this in Bangladesh, seeing some of the same opportunities here. One major difference in the way that the Bangladesh mobile money market works and the Kenya mobile money market works is that Kenya's market is essentially led by the telecoms. And in my understanding, you know, Safaricom holds a very big percentage of the, you know, overall telecoms communication in Kenya, and therefore was able to start building in mobile money into the SIM, into the phone very easily. So that, for example, if I wanted to send money to someone who I had in my address book, it was very easy for me to just to do that. I could get also, you know, receipt that says like, you know, John Smith received your 500 shillings. Thank you for this. In Bangladesh, because the government decided that the banking industry should be the one that, you know, guaranteed and oversaw mobile money, because it is a tremendous amount of money, and in some ways the banking sector is better set up for that type of regulation. So while that might make sense on the back end and probably longer term can lead to some really interesting innovations in the financial services, what it means is that you know, the telecom companies, you know, their role in this and the way that they work with the banks is less clear cut, and so there's been less initiative on their parts to start building mobile money features into their phone, right? And so it's kind of behind the scenes, people are working on mobile money. And so here we're almost entirely dependent on a USSD interface, which those of you who are familiar with it, you know, you press like *247#, you get a menu, you hit 1, you know, if you want to send money, and then you have to type in the number that you want to send the money to, you type in your PIN, you know, you add a reference code, right? So there's like 6, 7, 8 steps. So that's just a really complicated thing to do. And there's been a lot of discussion about how to simplify it, but without you know, trying to work across multiple telecoms, it'll be a difficult thing to do. I think a lot of people are looking to apps for smartphones as a way to get around this, and also a way to start integrating more Bangla into the interfaces. But obviously, you know, smartphone penetration is rapidly growing, but it's not necessarily growing in the populations that we've been talking about today. There are some interesting things going on. For example, in addition to Bcash has about 70-75% of the market. Kind of the next largest competitor, I would say, is DBBL, Dutch Bangla Bank Limited. They've been kind of experimenting more with call-based services, and so clients can call when they want to do a transaction, and it's all done over voice interfaces. So that's an interesting other thing. So I guess in terms of my closing remarks, I'd say that, you know, there's a lot of really interesting ideas, and I think that, you know, we all want digital to be part of the solution. The hard thing is just figuring out how it fits in all these other things, knowing what we do about the tremendous value of, for example, savings groups, right? I mean, I think like the bonds between an informal savings group or, you know, one of our village organizations, you know, that human contact and that interaction, the relationship and the trust are huge pieces to making financial services that are really inclusive and effective for people. And so we have to just figure out that balance of how to build in those, you know, those dimensions into a much more digitally oriented service. So thank you for letting me join today. And with that, I'll close.
So much. Andrew, do you want to take the political economy question?
Well, I'll have a go. I don't see why that 20% that you're talking about should not receive subsidies in one form or another in order to get them to join in this fast developing field. Otherwise we get to 2025 and we find that 20%, 30% isn't there. So the extension of the network to areas which wouldn't otherwise get it is a very obvious thing, which can and probably does in some cases get a subsidy. Facilitating these links to savings groups, governments can provide subsidies to encourage that. Some kind of small-scale matching funds. I don't know. The fees for the social protection funding is an obvious case. I think there's very little of that still. It's an idea. One or two schemes are working with it, but there are problems to get over there. Government can act as the facilitator in getting over those problems. I think in terms of regulatory models, yes, I mean the banks haven't served poor people well, basically. So I, as a kind of external observer, obviously governments are going to be listening to the banks, but I mean, there needs to be a movement to push against that. And perhaps if politicians realize better how many people are involved in these savings clubs and what the potential is, there might be, I think you guys need to advocate to politicians, your local partners need, I'm sure you do that already. But the politicians are, becoming, the more democracy takes a hold, elections matter, and politicians are going to pay attention to these sorts of numbers. So I think that will help move to a more open and competitive system, which will hopefully serve the poor, at least, if not the poorest, better in future. I do think the poorest are going to need a special push, though, and their government can come into the picture.
Thanks, Andrew. Just if I could just add to that on the political economy side, I mean, it strikes me that there's two separate streams to this. So the part of it is a straight subsidy element, because it's clear that, say, as an investor, you're not going to put masts in a certain area unless, part of your margin is subsidized. But then to the extent that there's a straight market failure dimension, as in the household is losing and the firm is losing and potentially the state is losing through revenue, the aim of the upfront investment is, it's a one-off payment which can potentially be recouped, as in you're going to generate a return that people, and I do think there's a very strong analogy here between credit markets and energy markets, that, when people are disconnected from energy markets, everybody loses. When people are disconnected from financial markets, ultimately everybody loses. So anyway, it's very good challenge to us all. Lucy and then William, or vice versa, as you want.
Okay, I've just got a quick comment on data, I guess. I'm following up on the comment before about how in many household surveys, if there is a question which says, have you saved anything or put any money aside, you'll get 99% of responses will say no. But then if you look at analysis of household surveys looking at what came in, what went out, in the majority of cases there is a difference. Money has been put aside. But I guess, part of the worry is when you have those responses, which could, say, be used by, private sector providers to say, well, there is no demand. And so there's probably real scope for phrasing the questions in culturally sensitive ways and properly expanding around it in order that, you don't have this massive 99% of responses saying, no, we don't save, we don't have enough money to save. And that can obviously then be combined with better qualitative and more frequent qualitative data collection to analyse just how people do save.
It'd be a very interesting question for India in the context of that survey to ask people under what conditions would you save in gold rather than save in a bank, or vice versa. I mean, I don't know what the answer would be, but I'd be very interested to have a position on that. William.
Okay, well, just very, very briefly on the subsidy question, I think I do believe there is a role for subsidising access to service, but as Kevin mentioned, on a sort of one-off basis. What demonstrated in Tanzania, for example, is that investment in some of the towers by the Gates Foundation has led to widespread spread of mobile money, and now there is basically no further subsidy going in there. And I think it's a successful example, as perhaps M-Pesa is, of an initial subsidy actually addressing that market failure and helping to launch what is now a commercially viable product, which may not be serving the very poorest, but is certainly pushing the barriers of financial inclusion down really fast and very comprehensively compared with previous technologies. So I think there's definitely a role for subsidy in those areas. Yep.
Thanks, William. So just a round of applause for all our speakers and Maria. Maria, thank you so much for joining us and staying for the whole discussion. It's really appreciated, and thanks to all of you for the questions and the discussions. Andrew, the next steps on the report, you've invited comments.
Yeah.
I guess people should email you guys.
They need to be soon, though.
Directly. So email them, read it over lunch, get your comments in early. And then the report will be available towards the end of the month?
Should be the end of the month, yeah.
Excellent. Thank you very much.